Welcome to Premia TNC's YouTube channel. In today's video, we are delivering the definitive guide to taxation services in Taiwan, the essential framework that forms the backbone of successful operation in this highly dynamic economy. Effective tax management in Taiwan is much more than completing paperwork or meeting administrative deadlines. It's about building financial transparency, ensuring strict compliance, and strengthening your company's long-term stability. When you manage your tax responsibilities proactively, you not only drastically mitigate the risk of penalties, but also reinforce critical investor trust and improve the quality of your strategic financial planning. In this session, we will walk through the fundamental structure of Taiwan's dual tax system, covering the key taxes: corporate income tax, individual income tax, and value-added tax. Crucially, we'll also examine the practical benefits and risks associated with international policies, such as the double taxation agreements. By the end of this video, you will have a clear understanding of essential filing requirements, audit expectations, and the planning opportunities that Premia TNC can help you leverage. With that foundation set, let's begin with the basic structure of Taiwan's tax system. Let's begin by looking at the fundamentals of Taiwan's tax system. Taiwan operates under a dual structure. Corporations are taxed at a fixed rate, while individuals follow a progressive rate system. This distinction is important because it shapes the way different taxpayers plan and manage their obligations and financial structures. The tax framework is built around three major pillars: corporate income tax, individual income tax, and value-added tax. Understanding how these taxes interact provides a clearer picture of operational costs, future planning, and compliance responsibilities. Today's overview is designed to give you both clarity and practicality, helping you meet immediate compliance needs while strategically preparing for longer-term tax planning. Now, with this foundation in place, let's take a closer look at Taiwan's income taxation structure. Corporate income tax is applied at a fixed rate of 20% on net income, which is calculated after deducting all allowable expenses, losses, and non-income taxes. Importantly, Taiwan promotes investment through various incentives in key sectors like technology and green energy. Leveraging these properly can significantly reduce a company's effective tax rate. For individual income tax, Taiwan uses a progressive system with rates ranging from 5% to 40%. The most important factor determining your tax obligation here is tax residency. Residents are taxed on their worldwide income, while non-residents are taxed exclusively on Taiwan-sourced income. This distinction is the primary difference in filing responsibility. Residents can also lower their taxable base through several deductions and credits, including those related to education and medical expenses. This makes proper documentation an important and often overlooked part of effective individual tax planning. Now that we've covered income taxation, let's move on to taxes related to consumption and payments to non-residents. Next, let's look at two essential components of Taiwan's tax system: value-added tax and withholding tax. Taiwan applies a standard VAT rate of 5% on most goods and services. It's a relatively low rate by global standards, which supports both consumer spending and general business activity. Essential sectors such as healthcare and education are exempt, helping reduce the overall tax burden for those industries. For companies, compliance is straightforward. File VAT every 2 months and maintain proper documentation for all transactions. Withholding tax applies to passive income paid to non-residents, such as dividends, interest, and royalties. Rates typically range from 10% to 20%, depending on the nature of the income and the jurisdiction of the foreign recipient. This is also one of the areas where double taxation agreements offer meaningful savings and strategic advantages. We'll discuss that further in the international section. Before that, let's turn to taxes related to property and wealth transfers. Now let's move on to taxes related to assets and wealth transfers: property tax, estate tax, and gift tax. Property tax in Taiwan is levied annually based on the assessed value determined by the local government. This includes the land value tax and house tax. Residential property tax rates usually fall between 1.2% and 4.8%, depending critically on location and classification. Estate tax applies to the transfer of a deceased person's estate at progressive rates of 10% to 20%. A critical compliance detail is that the return must be filed within 6 months of death. Gift tax follows the same progressive range and is applied to property transferred without adequate consideration. For planning purposes, Taiwan provides an annual exemption threshold, meaning only gifts above that threshold are subject to taxation. Together, these three taxes play a significant role in ensuring fairness and transparency in asset transfers. With that, let's turn to one of the most critical parts of compliance: filing deadlines and penalties. In Taiwan, the annual tax filing period runs from May 1st to May 31st for both corporations and individuals. This is a fixed and strictly enforced timeline. Missing this deadline can lead to immediate penalties, and any mistakes or inaccuracies in filings may result in additional fines and daily interest on unpaid taxes. These costs accumulate quickly. So proactive planning and accurate reporting are essential components of effective risk management. Maintaining well-organized financial records throughout the year and setting robust internal compliance reminders is one of the simplest and most effective ways to stay compliant. Next, let's talk about audits and why documentation plays such a central role in long-term compliance. Beyond filing, long-term compliance in Taiwan depends heavily on proper record-keeping. Tax authorities conduct regular audits, and when they do, they expect complete, consistent, and well-organized documentation. This is a non-negotiable standard for all businesses operating here. Businesses and individuals must retain all tax-related documents, including invoices, receipts, and financial statements, for at least 5 years. This is crucial because if an audit occurs, the tax authority may request original documents for verification during the review period. If records are missing or incomplete, deductions and credits may be summarily denied, resulting in back taxes, significant penalties, and additional interest charges. Now that we've covered domestic compliance, let's look at how Taiwan handles international taxation through DTAs and permanent establishment rules. For businesses engaged in cross-border activities, Taiwan's international tax framework plays a critical role. Taiwan has established double taxation agreements, DTAs, with more than 30 countries. These agreements prevent the same income from being taxed twice and often significantly reduce withholding tax rates on cross-border income such as dividends. Interest and royalties. Another key component is permanent establishment (PE) rules. Foreign companies may become taxable in Taiwan if they maintain a fixed place of business or provide services here over an extended period. Understanding these PE thresholds is essential because crossing them may create unexpected local tax obligations and potential penalties. Proactive monitoring of this risk is non-negotiable for foreign entities. With the international framework covered, let's now shift to practical tax-saving strategies that businesses can apply within the existing rules. Now let's explore tax-saving opportunities through credits and deductions. Tax credits directly reduce the amount of tax owed, while deductions lower your taxable income. Taiwan allows various eligible expenses and credits, including those related to education, medical costs, and business-related activities. Crucially, the Randy tax credit can significantly reduce the effective tax rate for qualifying companies. The key to maximizing these benefits is meticulous documentation. Without proper receipts and supporting original documents, companies cannot legally claim these valuable credits or deductions during the filing process. This proactive approach to documentation ensures that every qualifying financial benefit is captured and validated. To further enhance overall tax efficiency, strategic investment structuring also becomes important. So let's move into that next. Investment structuring plays a major role in long-term tax efficiency. Choosing the right structure or timing transactions strategically can help businesses benefit from more favorable tax treatment, such as utilizing lower capital gains rates to significantly defer or eliminate taxes. However, because tax regulations constantly evolve and international operations introduce additional complexity, professional consultation becomes absolutely essential. Effective tax planning is not something you revisit once a year. It's an ongoing dynamic process that requires continuous review, guidance, and strategic anticipation of changes. With these essential strategies for planning and compliance in mind, let's move into our final section: how Premia TNC Taiwan supports businesses in navigating these complexities. To conclude, securing reliable tax assistance is absolutely essential for maintaining strict compliance and achieving financial stability in Taiwan. Premia TNC Taiwan provides comprehensive support through 3 key service areas: expert advisory and filing services, ensuring accurate reporting and timely compliance across all domestic obligations; Interpretation of NTB updates, proactively turning complex official guidelines from the National Taxation Bureau into clear, practical, and actionable strategies for your business. Cross-border tax assistance, supporting strategic DTA applications and managing PE risk for seamless global operations. By partnering with Premia TNC, you gain the professional support necessary to stay fully compliant, strategically maximize tax efficiency, and focus entirely on sustainable growth in Taiwan's dynamic business environment. Thank you for your time today. We look forward to supporting your business.